Hi, everyone. Thanks for joining and welcome back to Wall Street Silver. Joining us today is Mario Stifano. He is the CEO and Executive Director of Galantas Gold and Chairman of Dory Copper. Thanks for joining us, Mario.
Thanks for having me, Ivan. Appreciate
Yes,
it.
it's an absolute pleasure. Mario, there's been huge news this past week about Silicon Valley Bank being shut down by regulators. And now the government has basically came out and bailed them out. How serious is the situation? How does this affect precious metals?
Well, look, I think the issue with the banks is a lack of confidence, and I think this is a slight replay of what happened in 2008. I don't think we're yet at the same extent of the fear factor that happened in 2008, but I think what you're starting to see with Silicon Valley Bank, Sovereign Bank, is that the market in general is now starting to question the financial viability of the various banks. And usually it starts at the lower level, the regional banks. And then from there, we'll start to see some of the bigger banks have questions behind it. You already started to see, I think, some questions around Bank of America and how this ties into gold and silver. Obviously, I'm extraordinarily bullish on precious metals. Is again, going back to my experience from 2008, when there's a fear in the economy and in the ability of governments and banks to meet depositors' amounts if they want to withdraw their funds, or if there's a fear of bankruptcies, that's when you really start to see gold outperform. And in this scenario, we're starting in a much worse position than we were in 2008. We're at high inflation, 6%. We would have seen the print today. So we're not starting at 2% or 3% inflation. We already are in an extraordinarily strong inflationary environment, and everything that the government is doing to solve these problems, I think, is going to create more money, more liquidity in the market, and it's going to put more pressure on inflation. So the Fed, I think, is boxed in.
They're ultimately trapped, is what you're saying.
They're trapped, and it's curious to see what they're going to do at the next Fed meeting next week. I personally think they have to raise rates. I think if they back off and indicate they're going to pause, I think that will show the market the seismic, or basically it's going to show the market that the U.S. government has systematic issues across the various banks, and the Fed is actually afraid that the banks may fail. So I think the Fed's got to plow hard, and they got to raise rates. I mean, look, 5% interest rates or 6 or 7% mortgage rate, that's the long-term norm, right? We've been well below that. And if the US government and the US economy and the Western world economy, for that matter, can't pay 7% mortgages, that's saying a lot about the situation we're in. I personally think the economy is much, much weaker than the world really understands. And it's all from this money printing. And there's only so much money the federal government and the Fed can print.
Mm-hmm. So, Mario, do you think the next rate hike will be the last one? Like, if another bank were to fail, will they be forced to move a lot quicker than they are now?
Yeah, that's a great question. And it's really hard to answer. I personally think the Fed needs to keep raising rates until inflation becomes under control. And look, I'm in California, and we just went out for dinner on a Friday, and I got to tell you, the waiter came to the table, offered a steak, and it was a sharing steak, and the cost, I guess, would have been for 4 people, maybe, sharing type steak, was $180.
Oh,
US.
that's crazy.
I mean, and a sharing fish, just a larger piece of fish, was $110. I got to tell you, I almost fell out of my chair. And just talking to people that I know here in California, things are really tough when it comes to inflation. So the Fed needs to get this inflation under control. Obviously the Silicon Valley Bank, there was a lot of fear with startups and the VCs that they would lose access to capital. I mean, the capital was never going to go away. Let's be honest here. Worst case, they may have gotten 95 cents on the dollar if there was no bailout. It was just really a timing issue for them. But they made a pretty big stink. I think that really prompted the Fed and the government to step in and guarantee all the deposits. If the Fed now stops at 25, number one, if you don't raise, I think that's admitting that the U.S. is in much worse shape than we really are. And I think that's going to be a quite negative view on the stock market, and it's going to be bullish for gold. If they do their 25 basis points, I think they're going to just wait and see what happens at that point in time with inflation.
Right.
But this thing to people here, I'm going to call it Main Street. People are hurting. And I think we heard Powell say at the Senate meeting, or it might have been the congressional meeting, that, inflation hurts those that can least afford it. And obviously the VCs and everyone behind Silicon Valley Bank were screaming. But I got to tell you, they're the ones that probably could most afford it.
Mm.
And yet, the people that are hurting from this inflation, and these actions may be inflationary again. So 98% of the U.S. economy is starting to hurt. And look, I know people that are making, $350,000 here in California, and they're struggling to make ends meet, which is mind-boggling to think about.
No.
But high taxes in California, high property taxes, food costs have doubled at the grocery store within the last 8 months, I would say, and within restaurants. I mean, you might as well take out a mortgage now to eat at a nice restaurant. I mean, there's just no point in going out anymore because
Yeah, it's crazy.
you probably afford it once a week. So I think the Fed is going to raise because they got to get inflation under control. If they don't raise at 25 basis points at the next meeting, I think they're now saying, well, look, inflation is no longer a priority and our banks are. I don't think that's going to be their position because, look, these were two large banks that failed, but they really weren't going to result in contagion to all the other banks. So I think they're going to do 25. And I probably think they're going to do one more or two more after that because they got to get inflation under control. They got to get housing costs under control as well. And that's going to be critical as well because housing is now even unaffordable for the masses. I'm not sure if you read some articles, but there are now a record amount of individuals who earn $175,000 that are choosing to rent because they can't afford a house.
Wow.
I mean, think about that. I mean, you're making $175,000 US a year, and you cannot afford a home. I mean, that something's broken, and people are afraid of the rates breaking something in the system, but the system is already broken. The vast majority of people in the US and Canada and probably the Western world now can't afford their basic needs. But the middle class has been destroyed, and it's not just inflation from today. I think it's all the actions of the Fed starting actually, I think after 9/11, and then it got a lot bigger, obviously, with the financial crisis, but it's continued. These low interest rates have really hurt the middle class. And people say, well, but it's all about affordability, what you can afford to pay. But I got to tell you, I would much rather buy a home for $500,000 and pay 10% mortgage rate versus say buy a $3 million home and pay 3% mortgage rates. I'd much rather buy a home that's more affordable, that the rest of my future is not dictated around trying to pay off that home that's way overvalued.
Mario, so people are saying what we are witnessing in real time is Lehman 2.0, and Credit Suisse default swaps have hit all-time highs, and basically the insurance to protect against the default on their bonds is skyrocketing. What does that tell you, Mario?
Well, man, look, Ivan, if I look at that chart, you would almost say that's a bubble, right? But it's an inverse bubble in the sense of, Jesus. I mean, I think that's showing that the market, there is significant fear in the market on Credit Suisse failing. Obviously, you would have seen that they announced that you can't rely on some of their controls, and so they're delaying some of their financials. And that's some scary stuff when you've got one of the largest banks in the world. And I got no idea how many what their derivatives are and what the hell they've done. Whether it's selling gold 500 times than the physical, and if they go down, what does that mean? Are we going to get a squeeze on gold and silver after this? I don't know. But some of these banks, and Deutsche Bank is very similar in many respects. They were heavily into the commodity space, and whether they're ever able to deliver some physical gold based on their swaps and their derivatives, if people start trying to get gold out of the system and silver out of the system, I bet you it's going to come from Credit Suisse, JP Morgan, and Deutsche Bank. That's going to be the biggest issues in trying to figure out how to get some physical delivery here. But look, I do think Credit Suisse will likely fail. It's going to require a European bailout. Whether it's going to be the trigger that causes more questions on all the other big banks, I don't know. But look, the Fed and the European Central Bank has shown they'll just print money to recapitalize these banks, and the governments will come in and try and recapitalize these banks. Now, I understand from Basel II, they're not going to bail out the equity holders like they did last time. They're just going to bail out the depositors. Right. Credit Suisse is going to be different though, right? Because there's going to be so much unraveling of their their derivatives that I don't know how that's going to impact all these other banks in the world. So that's going to be the biggest unknown. And it's those sort of things that could trigger, the significant rise in gold and precious metals, because that's what happened with the financial crisis. It's when that whole confidence level in the banking system goes away. And again, if you go back to 2008, there was a lot of talk about, the federal government and the Fed basically took debt away from the consumers, i.e. mortgages, because all the bankruptcies, and it's now being held by the Fed and the governments. Well, debt has only continued to go up. None of that has been paid down. I mean, you look at the U.S. now. I think I saw from the CBE, they're going to forecast approximately $2 trillion a year of additional deficits. That's heavily inflationary, right? So they're not making the Fed's job easier. And if you actually looked at some of the questions that Powell was given, there was a question around that. And I forgot, I think it was the Senator Kennedy that asked him that question, or it might have been, anyway, I can't remember exactly which senator asked him the question, but he was trying to get him to say, and he at the end came out and he said, if the federal government got their deficit under control, would that make your job easier? And he basically said, yes. That's basic economics. There's so much stimulus going on that the government has to figure out how to cut. And this is a complete difference to what China is doing. China's got this, I don't know, 100-year and 500-year plan. I have no idea, but they seem to be a lot more forward thinking than we are. And that's why China's been going out and acquiring commodities all over the world. The whole, the Silk Road kind of concept with China is access to infrastructure, building an infrastructure in countries in Africa and Latin America, because they want the commodities. They understand the importance of copper. They understand the importance of lithium, importance of cobalt, importance of nickel. Where here in the Western world, and maybe we call it wokeism, I got no idea, but mining has become this scenario where, anyone who talks about mining is viewed as against the new world order. And, to get to this new world order, you need a lot more metals. So Canada, particularly the US, trying to get mines approved now is becoming much more difficult. I think I just saw today that they approved some additional drilling off of Alaska, and already Cortez has basically said, how dare Biden do that to the left-wing arm of the Democrats, right? But obviously he's now recognizing the importance of having energy independence,
right?
And hopefully they're going to start recognizing the importance of having metal independence, because we need to produce a lot more copper, a lot more lithium. And you're starting to see governments starting to fund lithium, but it's got to go much deeper than that. It's got to go to all the metals, whether it's rare earths, even gold. I mean, look, gold mining seems to have a negative view because it doesn't provide anything, but the vast majority of gold comes from copper, right? Yes, there are some pure gold mines out there, no doubt about it, but the vast majority is a byproduct of copper mines and VMS deposits. And, copper, and securing copper is going to be the next key here. Obviously, there's lots of lithium in this world. You just got to find it, and you got to obviously process it and mine the lithium. But there is a lot of lithium out in the world, and it's great metal to be involved with. But copper is going to be the key, I think, now going forward. And we got to try and find more and more copper in this world. And obviously, China's done a great job in securing that. Look, now I'll tell you something. I can't tell you the company I talked to. But I was recently talking to a very large Chinese company that was originally gold, and they've now expanded into other metals. And the individual in corp dev was telling me they will deal with Canadian and US companies provided their asset is not in the Western world. So if they're in Latin America, Africa, happy to do strategic investments, look at acquisitions. But if you got an asset in the Western world, the Chinese will no longer touch us. And that's because of the views of, China trying to take control of our resources. But at the end of the day, if the Western world is not aggressively expanding and we're not able to find capital, I mean, look at the junior mining space right now. I mean, it's extraordinarily difficult to find capital, and all that capital is coming basically now from China. We've missed what really made us great in many respects. We were the first, whether it's Australia, whether it's Canada, we were mining powerhouses. And we seem to have moved away from that. right? And we need these metals. And China's recognized the importance of these metals. And if we don't come around and recognize the importance of these metals, we're going to fall further and further behind China. And that's just my view, because you're already starting to see it.
So Mario, you're involved in two companies like that. Can you give us a quick summary what you're doing with Dory Copper and Galantas Gold?
Yep, for sure. So with Galantas Gold, I'll start with that one. We've got a very high grade gold deposit in Northern Ireland, and grade's going to become king because inflation is hurting everyone, even the mining companies. So if you got high grade deposits, that's going to really help you get your asset and generate the cash flow that's needed. The reason why Galantas is really interesting, and when you're looking at these kind of companies, when you're trying to decide where you want to put your money into, obviously physical gold and silver is key. They should have as part of your portfolio, I think, anyways, some exposure to various stages of companies. The big guys like Newmont's, the intermediate producers, the small scale producers, and the explorations. And I think Galantas is interesting because we are only 20 kilometers away from Dalradian. And Dalradian, for those of you that are not familiar, was sold in 2018 to Orion, a very large private equity fund, for about 550 million Canadian. But they had at the time 6 million ounces at around 13 grams. We're here and it's much larger than that, could be up to 10 million ounces.
Wow.
And Galantas is on the exact same structure. We're hitting very similar grades, but we've drilled maybe a fraction of what Dalradian has drilled. And we already have 500,000 ounces, and we got a new resource coming out in the next couple of months, be it by the end of Q2. But we're seeing some really high grades now at Galantas, things like 13 meters of 17 grams, 7 meters of 30 grams, 5 meters of 37 grams. So some really nice hits now at Galantas. And I think that makes it quite special because we control this whole district. So, if we continue to find, as we expect we are, high grade gold, we're going to be able to find it along this whole strike. There's not going to be any other juniors that can be able to come in here. We control it, and Dalradian controls a large chunk of it as well. And then at Dory Copper, well, Dory Copper is in Quebec. And this camp that we're in used to be the biggest gold and copper camp in Quebec. Wow. It produced about 1.6 billion pounds of copper and 3 million ounces of gold, right? We've got a number of other copper deposits and targets, and potential other gold deposits and targets in and around the Joe-Man area. So again, this is a forgotten camp that, when you look at Kirkland Lake Gold with their Macassa mine and their Fosterville mine, these old camps that produce high-grade metals. And again, this produced 3 million ounces of gold and 1.6 billion pounds of copper. That's almost $10 billion of value, wow, in situ value in today's prices. Those camps are the ones that you're going to continue to find more. It's just a lack of drilling that we haven't found more, but also we've shown that we can find more because we now built this Corner Bay deposit to almost 8.5 million tons. So these are the sort of things you want to look at. And it's getting the security of high grade copper in Canada is going to be critical. Security of metals, because even our Galantas project in Northern Ireland, it also has silver and lead. The VMS deposit in Scotland has copper, silver, gold, zinc, and cobalt, which is also another critical battery metal. Mm-hmm. So, refocusing on these kind of targets, I think has huge value for investors and the countries as a whole. We shouldn't have to look at the DRC for our cobalt. We shouldn't have to look all over the world for our metals, right, and basically export out the requirement of mining from our own country when we have an abundant amount of metals in our own country. We just haven't really been exploring. You're starting to see it come back now with lithium, and I think it's going to continue to come back with the other metals. I
want to thank you so much for coming down to Wall Street Silver, and hopefully we can have you back down in the next 2-3 months as the market develops, of course.
Well, I appreciate it. I'm always happy to come on and just talk with your viewers and just talk about the facts. And
hopefully gold's 2,100.
Looking forward to.
Hopefully gold hits 2,100 by next time we talk.
Look, I personally think, in 3 months, 2,100 would be really nice. If we talk in 3 years, I think 2,100 is going to look extraordinarily cheap.
Yeah. Oh, well said. Awesome. Talk to you soon, Mario.
All right. Thank you.